Good morning. My name is Vladimir Tikhomirov. I'm Chief Economist at BCS Global Markets, and I'll give you my macro outlook for the coming week. Well, the past week has not been much different from the previous weeks. We have seen increased volatility on global markets. Basically, from January highs, we have seen already quite a bit of correction in global market indices. Russia was not immune. We have seen also signs of correction last week, but perhaps one important thing to mention here is that in the FX area we didn't see much of changes, which shows that the ruble remains fairly stable, especially if compared to other emerging market currencies and commodity currencies. One reason why ruble acts more favorably against the dollar is related to the fact that on one hand oil prices remain supportive for Russia, and on the other hand we have already seen quite significant devaluation in the currency, or let's say stability in the currency, which missed big rally in oil price. Ruble currently trades around 74 rubles to the dollar, which is about the level that we've seen 8 months ago when oil was about 30% lower. Again, a large part of capital outflows related to geopolitics, to change in inflationary expectations, rising yields on the bond market. All these outflows have already happened on Russian market late last year, at the beginning of this year, so that also helps to support the ruble. This is a good development because given rising inflationary expectations globally, we don't see much of inflationary impact from imports on Russia, given the stability of the currency. But nevertheless, inflation in Russia keeps on rising. This week we're waiting for monthly data from Rosstat on February inflation. We expect 5.5% year on year. Basically we expect inflation to start stabilizing in the next week or so. We still remain positive on medium-term inflationary outlook. We expect inflationary pressures to start to subside in late March, early April, and perhaps with more vivid changes in annualized inflation happening close to mid-year. And we retain our year-end forecast for inflation at around 4% year on year. If that's the case, we still believe, and this is our base case scenario, that the Central Bank of Russia would not change its key rate, remaining flat at 4.25 throughout this year. However, if we are wrong here and inflation turns out to be more sticky, we don't see major reversal in inflation in April. Chances are that already in April, central bank can consider tightening and perhaps pushing its rate up by 25 bips. Again, I want to stress this is not our base case scenario. Otherwise, in the coming week, we'll be watching mostly developments in the political area. On the European side, basically, their expectations are that European Union is going to stamp what has been already decided last week, which is basically widening sanctions, personal sanctions related to Navalny case, and including few Russian bureaucrats on the list, but restraining from economic, more painful sanctions. In the US, signals are that Washington is preparing its own sanctions package against Russia, but latest information is that might be coming within next few weeks, so it might not happen in the coming week. Sanctions pressure remains on the market and on the ruble, although we don't think that major economic sanctions are coming, which means that this geopolitical risk remains fairly moderate. Perhaps that's all on my side. Thank you.